It is that time of year again, unfortunately. It's tax time. I've had a few people reach out to me, and I always send my past clients their settlement statements, but you're going to need 4 things to get ready for tax time. Obviously, if you're employed, you're going to need either your W-2 or your 1099. Either one of those are going to be coming from your employer, and it's going to say how much you made last year. Obviously, that's important because that's the first part of taxes. Secondly, or thirdly, depending on how you're looking at it. Secondly, you're going to need your 1099 from your mortgage lender. So whoever you're making your payments to, they're going to send you, or actually sometimes they just email you, which is, at least for me, a problem because you have to log in and make sure you get it from them. They don't actually send it in the mail, which for me is really easy because I'm old, I guess. And in fact, today's my birthday. I'm 45 years old, so I guess I kind of am old. But the 1099 is what you're going to use to be able to deduct your interest from your mortgage. So that's a big deal. One of the things that people are talking about, especially with the new changes that they rolled out in 2018, is that there's a limit on how much mortgage interest that you can deduct. Everyone's freaking out. It's a big deal. Here's the thing. For most everyone I know and everyone I've worked with, it's not going to matter for you because your limit is up to $750,000 of a loan, and most of you are not going to have that problem. It's going to be New York City and California people that are going to have a problem with that. So make sure you have that document for either your TurboTax or for your tax preparer because they need that to be able to write off mortgage interest. Secondly, you're going to need your property tax statement, and I actually have one right here for you guys to see. It looks kind of like this, especially if you have a lender. It's going to look yellow like that. It's going to have the address and how much you paid over here. You're going to want to use that because that is also tax deductible and also needs to be claimed on your taxes. So that is our third thing. Your W-2, the 1099 from your mortgage lender, and then your property taxes. And then the last thing that you're going to need are any interest that you've made or your settlement statement from last year. So if you're someone who's sold property, you want the document that's going to say at the very top of it, settlement statement. That's going to have any points you paid, any property taxes you might have paid, all kinds of stuff. So if you get that to your tax preparer or you have it right next to you when you're preparing your taxes through TurboTax or whatever you use, that's going to help a lot. So I'd say start there. If you can get those 4 things by the end of the month, you will be golden to be able to file your taxes for the next year. So more to come on all of that, but feel free to reach out with any other questions that you have, and we'll just keep plugging along. Have a great start to 2019. Take care.